In my last couple of videos, we've been talking a lot about paying off debt, balance transfers, because I think that those things will help to decrease our credit utilization. And the quickest way for us to increase our credit score fast is by tackling our credit utilization. But did you know if you pay your credit card at the wrong time, you can report higher credit utilization? And it doesn't even matter if you pay your credit card at the end of the month. If it reports higher credit utilization, it can make it look worse than it really is. So in this video, I want to talk about how we should pay our credit card before the statement date. That way we're not reporting high credit utilization. Let's get into it. So y'all, in my opinion, our credit utilization is very important because when we look at all of the components of our credit profile, we have our payment history, our credit utilization, our length of credit, our new credit, and our credit mix. But if we want to increase our credit score fast, I think that it's best to tackle our credit utilization because out of all the components, if you want to see an increase in your credit score within 30 days, you really have to tackle your credit card utilization. And so they state to have your credit utilization 30% or less, but Experian is going to state we really want to be higher achievers. And so we want to report 7% or less. I think it's very important for us to make sure that we're paying our credit cards before the statement date. That way, when we report to the credit bureau, we're not reporting high utilization, because if you want to get other credit cards, you want to get a loan, maybe you're getting a car, a mortgage, you want to make sure that your credit score is high. So when we're taking a look at our statement, when we're paying our credit cards, we want to make sure that we know what is our statement closing date. And really it can say statement date or closing date. And this is when your creditor is going to report to the credit bureau. Now the due date is the last day that you can make your payment before you get those late payments. So we don't want to be paying that $35. So we want to make sure that we are paying by the due date. But you'll have to let me know, do you have auto draft for your credit card payments? I want to give a shout out to Key. And I know it's a few other people that do it, but I don't do it. But you'll have to let me know, do you? And last, it's very important for us to understand our credit utilization. Now, our credit utilization can definitely impact our credit score, I think, more than anything. And so with our credit score, we want that to be 30% or less. So for example, if you have a credit card limit that is $5,000 and then you spend $3,000, that's going to be 60% credit utilization on that credit card, especially if you let that report to the credit bureau. So that's why I'm saying it's best to know when our statement date or our closing date and our due date so we can pay it prior to. And then let's say if you do it that way, maybe you can pay it down and only have $500 reporting, and then that's going to report 10%, which is way better than 60%. And so that's going to look very good. So if you want to get, another credit card, do credit line increases, it's best that we are not overusing our credit. So when you are taking a look at your statements, you really want to make sure that we're taking a look to find the statement date. Now, I know depending on the creditor, sometimes it'll say statement date and sometimes it'll say closing date. So it's really important that we do that. But also what I like to do, I like to pull my credit report, and then you can take the dates from the statement, but then also look at your credit report to see if it's reporting correctly. Now, you'll have to let me know overall, do you care how much you are reporting to the credit bureau, or does it matter to you where your credit utilization is? Now, for me, I do like to report, especially if I'm going to be applying for credit cards, and really with Chase, because Chase, in my opinion, and what they have done to me, they will kind of like deny. Well, for me, they denied me, but then they approved me, but they took credit from another credit card and stated that I had low usage. So let's say if you're opening up a lot of credit cards, but then you're not really reporting, then they're going to really say, well, why do you need more credit? And that's almost vice versa. If you are reporting very high utilization, but then you're not paying it off, then it's just like, well, we really don't need to give you no more credit because are you using that credit appropriately? So I think it's in the middle. But even if we are reporting to the credit bureau, it doesn't mean that we have to pay interest on the credit cards. And that's what I like to do. So I wanted to show an example on my American Express Hilton Honor Surpass. So what I like here, it does state the closing date, and then it has the due date. So those are very important days that you want to make sure that you know. And so that's what I was saying. Here it says closing date, but on some of the statements, it'll say statement date. And so that's when they're going to be reporting. So I would just have to make sure that I ain't paying it down prior to the statement date. That way, once American Express reports to the credit bureau, I'm not reporting over 30%, which can decrease my credit score. Now, a few common mistakes out there is that we are only paying at the due date. And so we really want to make sure that we are not paying right at the due date, because sometimes it can take longer for those payments to process and it can be late. Because I know for myself, let's say with Navy Federal, to me, it takes longer for the payment to process compared to American Express, because when you pay American Express, it's like it already kind of zeroes it out, even though it still takes time to process. And so we just want to be careful that we're not right on the cusp so that it doesn't report a balance that we don't want it to. Now, the second thing, let's say if you're using your credit card like me, where I will use my credit card for probably 85 to 90% of my spend, and you can accrue a high utilization on that credit card. And so maybe we might not want to just make one payment or the minimum payment. Really, we want to make sure that we're making a couple of payments or just understanding our payment dates so that we don't report more than we need to. So usually what I'm going to do is I'm going to like to pay my credit card down to less than 7% and then let that report. But then after it reports, like a couple of days after that, I'll go ahead and make the payment so that I'm not paying any interest on it. Because for me, I like to report, a slight percentage so that I'm showing usage, but I don't want to pay interest on a credit card. So I like to do that, like I said. So if I'm going to be opening credit cards or things like that, and then two, I don't want them closing credit cards. Now I want to give a shout out to Nell, because I'm just like, man, he been reporting how the credit card debt is higher and on the rise than all of the other debt. And then I was thinking about it, and I'm just like, man, with credit card debt being so high, and then especially since you can claim bankruptcy on it, I'm surprised that the credit card companies are, approving so much credit card debt. And so I'm just like, we really have to be careful, because we don't want these credit card companies to be slashing, or cutting credit cards. Because, that happened to me 2 times, even though I didn't have a balance on the credit card. I really wasn't using it, and they cut the credit card. And see, the thing is, that was pretty much because I had one Bank of America credit card that was like $12,500. And then another, I think that was like $15,000. So that was almost $30,000 in credit, that they just took away. And so even though I wasn't using it, but I'm just like, dang, I had been with them for so long. And so, from time to time, creditors will do that. So, but I think overall, if we're going to use credit cards and we are going to be getting the points and the cash back, in my mind, it doesn't make sense to pay interest on credit cards and we are getting the points, because really it's just a break even. In the last couple of videos, we've been talking a lot about paying down credit card debt. And I know for sure I've had my fair share of credit card debt, but in the last several years, I haven't had any credit card debt, and I've been able to transition in a way to where I can use my credit cards for 85 to 90% of my spend, but I can pay it off and not pay interest. And, because I was thinking like, well, when did it really click in my head? And most of the time on the videos, I'll state, well, when I had did Dave Ramsey, and, on the baby steps, it say save a certain amount of money and then, pay down your debt, do the debt snowball. And I had cut all my credit cards. And, it's probably been like 2 times that I really have had to pay over like $10,000 in credit card debt. But the last time I did that, I was like, I am not going back. But I was thinking, like, was it another reason? And then I'll tell you, because I'm just like, man, let's say if you're getting a bonus at work or you're getting income taxes, and then it's just like when you get extra money, you can't even use the money how you want to because you got to pay down credit card debt. And so I'm just like, you know what? I don't want to do that no more, because I'm just like, that's kind of, to be able, basically I'm robbing myself of being able to use this money on stuff that I want to, going on trips and all that kind of stuff. And so I was just like, you know what? I don't want to do that anymore. And so that's why even now with my student loans, I'm going to be trying to make a plan to do that, because that's just kind of maybe even as bad as credit card debt. And I know you can look at good debt versus bad debt, but I'm just like, even with my student loans, it's just like, really, like I need to get with it. So I'm making a plan to pay that student loan debt off. So you'll have to let me know in the comments, what kind of debt are you going to be paying off? Are you going to be paying off credit card debt, student loan debt, mortgage debt, or what kind of debt are you going to be paying off? Because I love to see in the comments when people are saying that they're debt free, because I think that if we are debt free, then we can really do more with our money. And so that's really what I'm trying to do. So you'll have to let me know in the comments, what are you going to be doing for 2025? But I hope that this video was helpful. Please like, subscribe, share with a friend, turn your notification bell on so you'll be notified when new content drops. I thank you so much for watching. Until next time, check out my 2025 digital budget planner. I posted it on my Etsy shop. You can go into the description and click on the link. It's not a game.